Well, I'm joined now in the studio by Mark Stevens, who's Professor of Public Policy at Heriot-Watt University, and from our Salford studio by Jonathan Davis, an economist and wealth manager. Well, Jonathan Davis, the first thing is that the housing crash, which you thought was going to happen, hasn't really happened, has it? Certainly not compared to countries like the United States or even Ireland, even Northern Ireland.
Prices nationally are lower than they were at the peak in 2007, even though, as everyone knows, we have the lowest interest rates in history. And if you look to the west, not very far across the water to Northern Ireland, house prices are down 53%. So in some parts of the country, they are down 10, 20%. Nationally, they're down a bit less because of London. But there's no doubt the market has collapsed, as indeed the piece just said. The number of transactions is down about a half. And I tell you, anyone who knows anything about finance or the city or markets knows that when the volume collapses, the price will follow.
Sure. Well, except it hasn't so far. And as I said, at Northern Ireland were different. The United States was different. It's when you look at these markets, it looks like perhaps some of the financial engineering that was going on there was not going on in as extreme a way. It was going on to some extent, but not in as extreme a way in the UK. I mean, frankly, what we're seeing, you'd expect in a prolonged recession that the house prices would go down 10 or 15%, wouldn't you?
Indeed, and 35% against inflation. There's no doubt the politicians have been doing absolutely everything they possibly can to avoid a collapse on the mainland, but they can't avoid it because the economics are clear. Aggregate incomes are falling. The public sector cuts so far have only scratched the surface. There's a great deal more to come, I'm afraid to say, and at some point in the future, interest rates are going to rise.
Do you think that's true?
I don't agree with the emphasis. I think when you get rapidly falling house prices, it's a result of forced sales. And this is the big difference from the early 1990s, where we did see protracted falls in house prices. Then you had a period of rapidly rising...
Now, why are we not getting that? Is that because the underlying reasons aren't there, or is it because the government is leaning on the banks not to make repossessions?
I think the principal reason is the very low interest rate policy. That's the big difference between now and the early 90s.
Right.
And so what you get instead is you get this reduction in transactions. So that's where the adjustments taking place. But unless there's a trigger that sets people into forced sales, then I think we have a relatively stable house price outlook. Although there may be longer-term adjustments, which may be desirable.
Now, is there anything that can be done about it? For example, George Osborne would argue that very low interest rates in Britain are a result of his wonderful economic policies. There are many economists who would say they've actually got nothing to do with that. It's just because there's a massive private sector surplus and no confidence in investing in the economy, and that's why interest rates are low. So it's not at all clear that you could somehow engineer a rise in interest rates.
No, but I don't think that's the point. I think the point is that so long as we can retain low interest rates, then I think what we'll get in the housing market is a gradual adjustment. Now, I think that would be desirable. What would be undesirable would be attempts to stoke up the housing market artificially.
OK. Jonathan Davis, do you think that's enough, or do you think there's an argument for, as it were, seizing the moment? Given the distortions in the housing market and how it's arguably become a driver of inequality in this country and how difficult it is for younger families to get on the property ladder now, is there an argument for seizing the moment to actually force prices down to make it a bit easier for ordinary people?
You know, politicians, the people who lead the countries, they grew up in an era of falling interest rates and rising loans and rising house prices, and it worked. So they are now hardwired into believing that high house prices is actually good for an economy without joining the dots. It's dreadful for an economy because people can't buy, so they're spending a lot of money on rent, which means they can't spend it in the economy, and those who have bought mortgage, who have taken out mortgages, although the cost of them come down, the other chap's not right. Eventually, interest rates will rise. They are at a 300-year low. There's no way that's sustainable. So high house prices is dreadful for an economy. Low house prices is brilliant for an economy. Look at Northern Ireland. Look at America, where we have much lower house prices now. People are spending less on housing. They can actually put it into the economy.
Well, what do you say to that? I mean, it's a valid point, isn't it?
Well, I think it was... I may say so, a little hysterical. I mean, it is desirable, it is undesirable to have rapidly rising house prices in the long term. There was a belief, I think, that took hold that we were in this position where house prices would continue to go up, and somehow home ownership would be maintained, and somehow people could continue to borrow against the value of their houses and put that money into the economy. Now, clearly that wasn't sustainable. We had this big shock. We did see a fall in house prices, but we've also now seen some kind of stabilisation in house prices. Now, I think it would be desirable longer term for there to be a gradual reduction in house prices in relation to incomes.
If you're going to engineer that, Jonathan Davis, it seems to me the rather obvious thing, but it's politically very difficult, I mean, everything in Britain is geared towards buying a house because you don't have to pay capital gains tax when you sell it. But on the other hand, no political party is going to say, do you know what, it would be a more sensible housing market if we abolished that exemption.
And that goes back to what I was saying. The politicians are hardwired into believing that the people want high house prices. They're forgetting those under, say, 30 or 35 who don't have mortgages and are paying rents. They're forgetting retirees who are living in big value properties but which largely don't have any debts. There is a huge portion of the electorate which actually would be quite comfortable in having much lower house prices. The reason why we have high house prices is A, the politicians think it's good, and B, big business wants it, but that's no good for the real economy. That's the multinationals. Notice it's the multinationals who are laying people off.
Okay.
It's the small companies who take people on.
Right, we'll have to leave it there for the moment at least. Thank you both very much indeed. Now, the First Minister had something of a meeting of minds today.